All right. Good morning, everyone. Good morning, Philippines. Good morning, Vietnam. Good morning, partners and colleagues. I am Marlon Joseph Apanyada, Southeast Asia Engagement Lead for Climate and Energy for the World Resources Institute, or WRI, and the Philippines Country Lead for the Clean Energy Investment Accelerator, or CEIA. And I welcome everyone to today's cross-market lesson sharing dialogue on the role of competitive electricity markets in unlocking corporate clean energy choice in Southeast Asia's energy transition, focusing on Vietnam and the Philippines. I see that we are welcoming in our colleagues from different parts of Asia and the world as we speak. So before we formally open the other slides, let's take some time to welcome everyone. So welcome everyone. Thank you for joining us this morning. We have prepared an exciting program for you and an exciting and insightful lineup of speakers and resource persons. So with that, welcome everyone. And next slide, please. So we start with introducing one of the organizers of this event, which is the Clean Energy Investment Accelerator, or CEIA. The CEIA is an innovative public-private partnership that addresses barriers to clean energy deployment in the commercial and industrial sectors in emerging markets, which include Vietnam, Indonesia, and the Philippines. The CEIA is jointly led by the World Resources Institute, or WRI, Allotrope Partners, and the United States National Renewable Energy Laboratory, or NREL. Each member of this consortium brings a unique technical expertise to ensure successful country-based efforts. And we are led by local and regional staff, which are all supported by a wider global team. The program is supported by a range of public, private, and philanthropic partners. We offer innovative solutions focused on three pillars: purchasers, policy, and pipeline. We partner with large energy purchasers in Vietnam, Indonesia, and the Philippines to send a strong demand signal and deploy clean energy solutions in the region. In parallel, we collaborate with governments to strengthen policy frameworks and grow the clean energy project pipeline through transaction support that have the power to move markets. Next slide, please. We just start with a few framing slides, and we start to frame the Philippine context on unlocking corporate clean energy choice by starting with really a description on the Philippines' liberalization of its energy market with the passage of the Electric Power Industry Reform Act, or EPIRA. This opened the market to increase private sector participation and led to the deregulation and demonopolization of the power generation sector, as well as the creation of the wholesale electricity spot market, or WESM. The liberalization and demonopolization of the electricity distribution sector, on the other hand, has been done via the country's retail competition and open access, or what we call RCOA here, and the upcoming Green Energy Option Program, or the GEOP, provided by the Renewable Energy Law of 2008, which now allows energy users with demand of at least 100 kilowatts to purchase electricity directly from renewable energy suppliers. The graph in the bottom of the screen shows the growth of renewable energy generation of the Philippines since the passage of the EPIRA reforms and the Renewable Energy Act of 2008. We hope truly that the ongoing GOP and auctions policies that we are expecting will truly unlock more clean energy deployment in the country. Next slide, please. Now we focus our attention to Vietnam, which has firm ambitions. Similar to the Philippines, Vietnam's firm ambitions have boosted the growth of its renewable energy market. Its solar capacity, which was less than 100 megawatts just 3 years ago, has significantly grown to 16.4 gigawatts as of 2020, 7.7 gigawatts of which was from rooftop installations alone. This was the result of the implementation of feed-in tariffs and net billing mechanisms, which we're greatly supported by the state utility EVN, which is a state-owned generation and distribution utility. The direct power purchase agreements or DPPA program is also expected to be implemented soon and is expected to provide a wider option for corporates in Vietnam to procure clean energy. So we'll learn more about the Philippines and Vietnam policies and programs from our expert resource speakers. But I just like to highlight an Asian market which has been completely both liberalized and has established firm ambitions, which resulted to sustained renewable energy growth. So next slide, please. We highlight the case of India, which is both liberalized and has firm ambitions. India has recently achieved its milestone of installing 100 gigawatts of new renewable energy capacity last August 2021. And it currently has the world's largest clean energy program with an aim to achieve 175 gigawatts of renewable energy capacity by 2022 and an overall goal of 450 gigawatts by 2030. So in India, cohesive energy policies have allowed it to significantly grow its solar energy capacity from 6.8 gigawatts in 2016, just 5 years ago, to almost like 700 times in by March 2021 to 40.1 gigawatts, growing at an average rate of 6.6 gigawatts a year. So very interesting to look at the India case. And next slide, please. It's not just on solar. It also applies to its wind sector. So similar innovative policies have also been in place for wind, and wind capacity addition in the last 4 years has been at an annual average of about 1.5 gigawatts yearly. And it cumulatively reached 39.2 gigawatts of capacity just this March, the fourth largest installed wind capacity worldwide. So we want to see how the interplay of liberalization and firm ambitions can truly unlock things. And it is in this context that we hope to answer many questions in the open forum, but please feel free to put in your questions to our expert speakers in the chat box. So first 3 questions that I have in mind, but I hope that we also crowdsource more of your questions in the chat box and the Q&A box. One of the first questions that we have is, first, what are the channels to replicate India's sustained renewable energy scale-up, given its adoption of both market liberalization and firm ambition? Second, what is the role of corporates, both energy buyers and sellers, to establish and sustain RE markets? Is there a way for them, both energy buyers and sellers, to be more proactive? And number 3, grid infrastructure readiness truly is a real challenge in both Vietnam and the Philippines. What can really be done to address the challenges and capture opportunities at scale? So with that, next slide, please. To answer these questions and other queries from participants in the duration of the webinar, we are truly humbled and excited to have gathered an excellent set of speakers and resource persons. We are joined today by Mrs. Nguyen Ngo, Executive Director of the Vietnam Initiative for Energy Transition, or VIET, and Mr. Alberto Bert Dalusing III, Senior Advisor for the Institute for Climate and Sustainable Cities. We also have Mr. Roman Miguel de Jesus, Executive Director and Commercial Operations Head of AC Energy, Mr. Shalish Telang, Technical Manager of the CDP, the Carbon Disclosure Project, representing the RE100 initiative, and Mr. Mark Marcelo, Environment Manager of Toyota Motor Philippines. Again, please feel free to type your thoughts and questions in the chat and send in your questions using the Q&A box at any point during the webinar, and we'll try to allay these questions and answer these questions during the webinar. So let's kick off the discussion with a presentation on competitive wholesale and retail electricity market development and its role in the Philippines, renewable energy scale-up and broader energy transition, to be presented by none other than Mr. Bert Dalusong. So Sir Bert has 40 years experience in the energy sector with particular focus in renewable energy development, national energy planning, and policy formulation. Sir Bert served the government as Director for Energy Planning in what is now the Department of Energy. Sir Bert is also the former president of the Biomass Renewable Energy Alliance and serves as a board member of the National Renewable Energy Board, representing private sector developers. So with that, without further ado, Sir Bert, the floor is yours.
Thank you very much, Marlon. Let me go right to it. So just confirming if you can see my screen.
Yes, we can see it very clearly, Sir Bert.
Okay, thank you. Let me go to first slide, and this is just describing the Electric Power Industry Reform Act, which defines the roles of power sector participants in the Philippines. Let me just, okay. As you can see, power generation, transmission, and distribution in the Philippines is done only by the private sector. I think this is unique in ASEAN. And what we have, if you look at this schematic of power plants, the transmission lines, the distribution lines, and the customers, we have the ability to get the information from this wholesale electricity spot market to guide policy and to guide all of the participants as they exercise their roles in the sector. I'd like to point out that as WESM is implemented, it continues to grow. And what we'd like to see is the extension of WESM in Mindanao. Today, WESM is only operational in Luzon and Visayas. There's also a plan to have a reserve market, a market for reserve capacity as part of the wholesale electricity spot market. Also, as discussed, we have a retail market, and we've been lowering that threshold. It started at 1 megawatt. It's now down to 500 kilowatts load on a voluntary basis, and the plan is to continue to lower it until it reaches the household level. There's also demand aggregation being planned. In other words, if you do not meet the minimum, then you can combine with other similarly situated participants to come up with an aggregated demand that meets the threshold. Finally, in the renewable energy thrust of the WESM, we are expanding the WESM to include a renewable energy market within the WESM. And later on, I'll talk about the Green Energy Option Program that has a 100 kilowatt threshold. So if you're, let's say, a contestable market, you need to have 500 kilowatts. If you are a buyer with 100 kilowatt threshold, you can choose your supply through the green energy option. But I'd like to focus on what are the options of the end user in the Philippines towards more RE power supply. First of all, the first option is a power supply agreement via a retail electricity supplier, or RES, as we call it in the Philippines. So like I said, this is available for those with at least 500 kilowatt average load. It is an opportunity to have lower costs than your distribution utility. And later on, I'll show you what the costs are of the major distribution utilities in the Philippines. For example, Meralco, Manila Electric Company, serving Metro Manila. Finally, it is an opportunity to choose the rest with renewable energy supply. For example, there are RES companies which include geothermal, biomass, solar in their portfolios. No? And second and final point, the Green Energy Option Program, as we discussed earlier, it's available for those with at least 100 kilowatts load. It is 100% RE. Now, as it's currently formulated, I have some comments on how it can be improved. And hopefully we can get feedback also from some of the reactors that you invited, Marlon. I'd like to spend some time on this chart because we always see, a low duration curve, a single line. In the case of the Philippines, demand is highly variable. As you can see, and I'll point out, these are hourly demands from 2019. Let me take you to interval number 14, or the demand between 1 p.m. and 2 p.m., which in our system, in this case, Luzon, is where the peak occurs. Now, in this peak hour, at interval 14, and I'm eyeballing it, you can see, and these are quartiles. The line shows the median, the dots show the average. The average is about, let's see, 9,300 megawatts. But the third quartile is over 10,000 megawatts. And while the first quartile is like 8,500. So if you look at the difference between the first and the third quartiles, or 50% of the time, that spread is something like 1,500 megawatts. In the Philippine case, that's like two of the largest power plants. But that's the, 50% of the time, power can vary. That just shows you that in the Philippines, we have a need for more flexible generation. Also, as I will discuss later, there has been a push for quote unquote more baseload capacity in power procurement. Now it's turning out to be probably the wrong strategy, because now there is no power plant in the Philippines that operates as a pure baseload, including the coal-fired power plants. We'll talk about that later. But the main point here is we have a very variable load in the Philippines. We need flexible generation. Now, here are the generator-weighted average prices between 2015, where when we had what we call La Nina, El Nino, or drought. Significant capacity in the Philippines is from hydro. So in a period of drought, prices go up. But here we can see in 2019, the red line with the last year prior to the pandemic, prices were very high, reflecting the need for more capacity at those hours. For example, the highest prices, average price was at interval 16, or 4 o'clock in the afternoon, over 7 pesos per kilowatt hour for the whole year at that, in 2019. Now, my question is, given that these are our prices, remember we have this because we have a WESM where we know exactly what's going on, what are the dispatch levels, what are the prices every hour of all of the power plants in all of the points in the grid. Is merchant RE viable under this scenario? We know that, for example, a solar power plant in the Philippines can probably make their target return selling at 4 pesos per kilowatt hour. Now, the question is, will banks fund you if you say you'll be a merchant? So I'm just throwing it out. I think I'd be interested to find out what some of our reactors will say. So, but here are the numbers. Even in the pandemic year of 2021, the average generator-weighted average prices have exceeded those in 2019, as you can see. And we're only capturing information up to June 25 here. Huh? Okay. My only point in this slide is to just so you understand the Philippine power configuration. We are dependent on coal. It's the dominant power source. It is more than 50% of our generation, as these numbers show. Now, the expectation in the Philippines is, well, we're doing this because coal is reliable and cheap. Power should be cheap. And that's why we're doing this. Later on, we'll see if that is true. Now, I'd like to talk about the impacts now of WESM on the RE scale-up. First, like I said, it's a transparent market with detailed market operations that should enable better planning and operations. Later on, I'll tell you some of the findings that we have looking at these operations on a technology per technology basis. Second, it is an available market where RE generation is given priority in dispatch. In other words, you build it, WESM will take it. You build an RE power plant, whether it's solar, wind, say biomass, WESM, according to our rules, will take it first before it considers fossil fuel power plants. That's the way the dispatch protocol works. So it is an available market. I don't think this is fully, let's see, I wouldn't say understood, appreciated by the players, especially financing companies in the Philippines. But here you have a sure market that energy from renewables will be absorbed. The only problem is at what price? And third point, WESM in Mindanao will enable retail competition in Mindanao the way it is now available in Luzon and Visayas. Now, given that we've got this information, what do we find? We find that if we look at all coal power plants, on average, all of them frequent outages from 8 to 9 outages every year, with unavailability exceeding recently set ERC thresholds. And I'm looking at the numbers, over 60 outage days per year. So, and remember, a lot of these are forced outages. You don't know when they occur. And these are coal power plants, large power plants. Every time one is down, there's immediate impact on the spot market, on WESM. Who bears that cost? The customers, of course. So we point out that all of the coal power plants are cycling. In other words, they're not running at a set optimal base load level. All of them ramp up and ramp down. I think this is a major reason, according to the DOE, for the unreliability that we've seen. This is coal. Biomass, focusing on the biomass power plants without the seasonal operation. You see a lot of biomass power plants are linked with sugar mills. They operate seasonally. But for those that do not, we see that they operate primarily as base load with very low unavailability rates, low outage days. In other words, a lot more reliable than coal. Of course, biomass are distributed, they're a lot smaller. But probably, we said we need more flexibility in the grid. We probably need more distributed plants of this nature that are more reliable. Look at solar. As we expect, solar has variable generation. But there are very few times when you had outages from solar plants. In other words, when you expect them to be on, they are on. Of course, the variability is there given the irradiance and so on. I am told that current techniques will enable more accurate predictability of this variable generation. We look at wind, same variable generation. In fact, even lower unavailability rate than solar. And finally, if we look at the data on market operations, the combination of solar and wind in 2019 is such. What do we find? That it can, you overlay the variability in our hourly loads earlier shown, and you see the ability of solar and wind as a combination to address the peaks is there. It's available during the times that we have the peaks. And in fact, since this is actual 2019 data, if we had more wind, then we can cover the late afternoons and evenings, because that's when wind is stronger in our generation profile. So key takeaways from the WESM data. Number one, coal power plants are not reliable. They have exceeded ERC thresholds every year that we've looked at. On the other hand, RE power plants are reliable based on the data. RE power plants are not intermittent. Solar and wind are variable. Hydro is seasonal. And finally, RE power plants, as I've shown you in a very simple explanation, they can address peak demand. And that should be one of the considerations when we update planning for our in our power development plan, in our national renewable energy plan. Now, green energy option. I won't go into the law that developed it. I'll focus on this is the cost of power generation charged to captive, the blended generation rates of the three main utilities in the Philippines. Meralco in Luzon, VECO in Visayas, and Davao Light in Mindanao. As you can see, very high and very volatile costs. And if you look at the 2021 numbers, increasing sharply, because as we've read about, fossil fuel prices have been rising. So if you're the end user, you are paying for the generation cost. As a Meralco customer, generation costs are about 50% of my electric bill. 50%. And yet we know, and there's a reason why the lowest axis here is 4 pesos per kilowatt hour. All of these numbers are above our notional selling price of solar, for example, which is like 4 pesos per kilowatt hour. No? So certainly you can displace this if you have access to solar electricity as a customer. Whether if you buy it or you implement it because you put solar on your rooftops. And if we go into more detail, I'm unpacking the Meralco generation cost. So you see that in Meralco, most of the supply comes from coal and gas, and it's coal. You see the cost in, let's see, I think that's February 2019, more than 750 pesos per kilowatt hour. That's coal. We paid for that. I paid for that as a Meralco customer. Volatile cost due to the volatile prices of fuel. So the key takeaways from DU generation costs, they are high, they are volatile. Coal generation costs are the primary reason for the volatility and high cost. Now, earlier we said, why did we focus on coal? It's supposed to be reliable and cheap. Thus, from the earlier slides and from the recent slides, the notion of reliability and low cost of coal power has been debunked by our analysis of the WESM data and the DU generation costs. So, way forward, this is my last slide. I think we need to improve grid infrastructure to enable more RE generation. It's already there in the transmission development plan. It just happens to be delayed and delayed significantly. We just need to hasten implementation of what's already there. I see very good things in the latest transmission development plan of the national grid. Number two, improve the power procurement of distribution utilities. Everywhere I look, base load over contracting. And then contract provisions on automatic fuel price pass-through and annual increase in fuel consumption. It's there. I look at the detailed PSAs, those that I have had access to, and it's there. It's like in the fine print. And also the need for risk sharing in disruptive events. Earlier, I showed you Meralco costs compared with VECO and Davao Light. You find that since the pandemic, Meralco costs have declined. Why? They have carved out provisions in their power supply agreements. That's probably the reason for the decline. But now everyone is having to deal with the rise in fuel prices. And finally, green energy option, I think we need to take another look at our rules to enable more deployment. First, let's remove that requirement to have a retail electricity supply license. RE already has been fully vetted, subject to a lot of scrutiny. If you're an RE developer in the Philippines, why couldn't you sell direct under the green energy option? No? When you've been fully vetted by the DOE and so on. Number two, there is a requirement that if you will opt to be part of GEOP, that you replace everything you buy from the DU with a renewable energy supply. But we know that the least cost is never a single supplier. It's always a portfolio. So it's not it's not an ideal situation. I want to go renewables, but you want me to sign with one supplier, no? And not only that, in point 3, you need to have a requirement for replacement power. In other words, I need to have basically 2 contracts, one for my supply, another for my replacement power, which also has to be RE. I think this loads a lot of things on the transaction, and when it could have been a lot simpler. So I end on this slide, Marlon. Thank you for the opportunity. I'm excited to discuss these things with our reactors later.
Thank you, Sir Bert, and thanks for all these insights. And yeah, as mentioned by Sir Bert, truly welcome reactions from reactors, which will come from a regional renewable energy developer with interests in both the Philippines and Vietnam, developing RE plants. So we have that. We also have a large energy buyer representing supply chains, not just on its own company, but also its supply chain partners. And another reactor from a global initiative supporting scaled corporate renewable energy from corporates. Excited to hear the reactions on your presentation, Sir Bert. So many points on things to react on whether merchant RE plants are viable, what can be done to hasten grid infrastructure development, and how do we work together to update the planning process, knowing that, you know, as you've shown in your slides, how a combination of solar and wind really spells out reliability and cheaper costs. So many points there, Sir Bert. Thank you so much for sharing your insights. I invite you to check the Q&A box if there are any questions that you want to just type in terms of your answers. Otherwise, we can move forward with our program. Moving on, now that we've heard, you know, such cutting-edge insights from the Philippines, and for me, it was really exciting to hear of these very new data points which we can work on, consolidate, and relay to decision makers on both government and business sector. We are now gonna move on to present our insights into the Vietnam renewable energy market, and we have Mrs. Nguyen Ngo from the Vietnam Initiative for Energy Transition, or VIET, to share her expertise. So Mrs. Nguyen Ngo holds an engineer's degree in electronics informatics from the Hanoi University of Science and Technology, and she is also a former fellow of the International Climate Protection Fellowship of the Alexander von Humboldt Foundation, and a former researcher of the Ministry of Science and Technology. So we're really privileged to have the executive director of the Vietnam Initiative for Energy Transition to present her insights. Mrs. Nguyen Ngo, please take the screen. Thank you. Go ahead.
Thank you, Myron.
Please share your screen. Thank you.
Yeah, I cannot share my. Okay, thank you. Now I can share my screen. Yes. Can you see my screen?
Yes, we can see the second slide now. Maybe you can just slide show. Yes, perfect.
Okay, good. So my presentation today will the headline would be renewable energy scaling up and the broader energy transition. So I will separate my presentation in three parts. First, I would like to answer the question why the competitive power market is important to scale up renewable energy in Vietnam. And secondly, I will speak about the policy pathway in Vietnam. And thirdly, we'll discuss a little bit about the challenge and the barrier and some lessons learned. So here you can see that the change of the generation mix in Vietnam. From 2018, we have less than 1% of the total electricity mix from renewable energy. But up to 2020, we have more than 25% installed capacity come from the renewable energy. And in this year, it's going to be come up to the 29% installed capacity come from the renewable energy. So we see that in Vietnam, the electricity power sector is like transit from the fossil fuel generation to clean renewable energy resource. So what policy in Vietnam is support for that? So mostly it's like we have a feed-in tariff for wind energy, for solar energy. And based on that, then the investor is more interested to invest into the power market in Vietnam. So we see the transition from the, firstly in 2011, we have only 30 megawatt from wind energy. But in 2020, we have 533 megawatt. And it's caused by the feed-in tariff, the second feed-in tariff in 2018. So in the end of this month, it may come up to 5.8 gigawatt from the wind energy. So you can see in the map is the location of the wind energy project in Vietnam. For the solar, then we see that the first feed-in tariff will come in 2018. With 9.35 cents per kilowatt hour. Then after that, it's booming the solar energy, and up to now we have until 2020 that we have as a second feed-in tariff for the solar, but it's already expired in the last year in December last year. So this is the renewable energy development mechanism. So you can see that normally in the first, only from solar, then we see the feed-in tariff. The first feed-in tariff is really a kick-off for the market is development. But for the second feed-in tariff, it was somehow to recover and to protect the sector development. And for wind energy, it's opposite. Like first feed-in tariff doesn't make sense. So the market is silent. But then when the government is changed to the second feed-in tariff, then the market is react, and then we can see the development of the wind energy in Vietnam. But for the biomass and waste-to-energy is still slipping. So I would say, but we think it could be booming again if the feed-in tariff is like can somehow like adapt to the market. So in the long term, actually, Vietnam still have like, for example, we have Politburo passed the resolution 55 in February 2020. And in this resolution, it say that Vietnam still continue to develop renewable energy. And it's going to be like need to have a roadmap reasonable to reduction of the power share from the coal-fired power projects, and also continue to accelerate the digital transformation in the energy sector. So we also can see that in the resolution 140 from the government is also assigned the leading institute for the establishment of renewable energy law during the 2021 to 2025. So that means the government is supporting for the renewable energy development. And also in the PDP Act, it's also set the priority is to develop the power resources on the renewable energy and the economics and efficient use of the power. But when we look at the draft, I would say this is kind of like final draft for the PDP8. We can see from 2021 to 2030, the movement in the fossil fuel is still quite a big amount, which is like 69% of the new power plant will come from the fossil fuel. But for very less, I would say it's just only more than 20% is from the renewable energy. So it's not really a good movement if we look at this draft power development planning. But when we look at the 2030 to 2045, then we see the shift, it changed to the renewable energy. So it's shift to like almost more than 50% will come renewable, new power plant will come from the renewable energy. So what is a policy and pathway of Vietnam to implement and planning for the competitive power market? So in 2013, then the Prime Minister already approved for the power market roadmap to establish the overall plan for the market power development consisting 3 major steps of reform. In 2011, then the Vietnam competitive generation market is established, and then in 2012, then the Vietnam Vietnam generation competitive market is fully operational, and in 2016, then the wholesale electricity market pilot is begin. In 2018, the Vietnam generation competitive market is covered 51% of the installed capacity, and is scheduling the volume is about 4.6 billion USD. So we see the design of the competitive power market, power generation market here. In this design, then the intent of the market was establish the rule and the procedure for single buyer and cost-based electricity market to proceed with the structure unbundling of the EVN with the arm of the further market liberalization. And this was done by having single buyer, the electricity power market, power trading corporation, this purchase all the power from the generator and providing the power to power corporation under the bulk supply tariff, and the power companies selling the power to end user customer based on the uniform retail tariff. Not all the generators have been competing in this market. Around 50% of the installed capacity is not traded directly in the market. We cover only those that have a classified at the beginning being direct trading generator. Indirect trading generator are scheduled by the SMO, which also manage the strategic multi-purpose hydropower plant, and that has also regarded as the indirect trading generator. So we see the market is look like I think it's more or less it's like still inside of the EVN. And for the wholesale electricity markets of Vietnam, we see that the intent result of this design is to over time for the power company to enter into the contracts directly with the generator, such that total contract portfolio should larger match their load profile, and where the mismatch between their contracts and actual demand occur, power companies will face some spot markets exposure. So for the design of the Vietnam electricity retail market, then we can see Vietnam is officially run the competitive retail markets in 2023, but it's up to now we are not have any like a clear clear design and who would be like the new I would say the new company would involve into the retail market in Vietnam. It's still in designing and in under the government decision. So it's a little bit different to the to the Philippine market. So we see that what is the trend we see in the part is like we have from the grid balancing yesterday and today, then we see the generation in the part is a straightforward and simple. So we have an advantage of the reliable, dispatchable, and predictable, because you have only two sources like a coal power plant and hydro power plant. But in the new phase, then we have solar and wind, and that makes the thing more complex. So we have big change in the generation mix, like intermittent and decentralized. And then it's also need to have a new definition like the prosumer. But anyway, when we look at the energy market governance, we did not see much change inside the market because most of the company who's buy the electricity, sell the electricity, or even for the transmission and distribution, is still under EVN, and the price is still like controlled by the government. So we do not have really the price flexible according to the demand from the market. So if we look at the finance issue in the power market in Vietnam, we can see the tariff is allows the national power company to recover it's only the operating cost, but not the capital cost. And the customer class contributes a revenue that's close to match their share consumption for the national power company. And the main finance set for the Vietnam power utility is that the tariff is not fully recover cost. So you see the development of the cost of the electricity in Vietnam, but it's compared to the other countries, I would say it's not like high as you already see in the slide from the Philippine colleagues. So, but it's under the control, and it's still need to be considered to have a roadmap for the electricity price in Vietnam, but not yet existing. So for the policy of the power sector, we see that we have there the deployment targets. There is IPP legal framework, foreign ownership, fit-in tariff, but we are not yet have the capacity for the auction. That means no competitive existed. Actually, standard PPA we do have, but the standard PPA is not really like bankable in some point. And we have talking about the direct PPA, but it's just only like talking, but not yet have any action of the pilot or how when it could be implemented. And then we have a tax incentive, and for the carbon pricing we are not yet it was covered by the environment protection tax, but it's not yet have a carbon market. Yeah. Sorry. So from our group, we was propose that maybe for the renewable energy, we can apply for the virtual power plant or direct power purchase agreement. The difference between that two terms is a little bit like different, but in any way, it's going to support for the better renewable energy development under the competitive market. And so we said that for the to implement it two mechanism, then Vietnam need to consider calculate upgrade the ICT infrastructure in the backbone of the virtual power plant. And then we also need to have a better control center to have a can be like flexible in design and control function. And then we also need to have a better education and support for these two like VPP or like DPPA. We also think that for the electricity market and regulatory, it needs to be like more open and more better competitive. For example, for liberalization status of the electricity market to determine which business case are viable for the VPP or like unbundling or partly bundling, monitor schedule optimization and forecast, and liberalized market. Various options for the market is developed. And we think it's better that the government will pilot the project in the new market. And from that, then somehow it's also can match with the development of the retail power market reform. And the efficiency of the operation and benefit close relate to the regulatory framework. Then we need to have equally necessary for the requirement, for example, the market access, transparency, information exchange, right for the network connection, and provision to local and national auxiliary service, and also the interacting incentive, not the fit in a fit, but we also can consider about the competitive market. And the change in current regulatory framework must comply with the national energy security as well. So this is some information to share from Vietnam side, and welcome for the question and later on for the discussion as well. Thank you.
Oh, thank you so much, Mrs. Nguyen Ngo. Really, cutting edge insights and sets of new information. Very, very insightful. And I would like to highlight like the challenges being faced now in Vietnam on grid balancing, the financial stress on Vietnam's power utilities, as well as the way forward on electricity market and regulatory considerations. Those are things that we can maybe get the reactions from our reactors. But otherwise, before we go forward with the reactions, I just like to highlight a couple of questions from the chat box before we proceed with our open forum. Sir Bert, there's a question on what is the cap on WESM prices, and what are your thoughts on how it may constrain or develop a general renewable energy market in the Philippines, as well as the effect and impact of the recent trends in global gas prices on the WESM. There's also a question on what can be done on for solar rooftop systems investors. I'd like to lump that in like one question for you, Sir Bert. And for Mrs. Nguyen Ngo, there's a question about there's still a significant scale up of coal pipeline in Vietnam, at least for the next few years. But one participant pointed out that because of the pledges on coal financing from major Asian economies, what are the plans should those fossil pipeline not be built, and how do we ensure power supply still in Vietnam as the country still grows economically? So first, Sir Bert, the floor is yours to answer those questions.
Yeah, just quickly, in the GWAP, generator weighted average price, that already captures the caps. There is a cap, for example, if the average in a certain period exceeds something like 9 pesos per kilowatt hour, then they bring down the price automatically to something like 6 pesos per kilowatt hour. it's already captured in the GWAP. Now, what do I think of caps? I don't like caps. I think that caps, as pointed out, limit the WESM is a market signal. It tells you it's not bad if the price is high. It's telling you we need more capacity at that time. So if you diminish the signal, then you don't get the signal and the action is affected. So yeah, I don't like caps. And on the solar rooftop again, you were at, I don't quite remember the question, Marlon.
I think it's what will be the because of like impacts of a pandemic where there's no
Okay. I think
yeah.
I think that if you have a solar rooftop, it's probably either you built it yourself. In other words, it should shield you from the impacts of the cost increases during a pandemic, because you built it yourself, you took the risk. But it's also possible that somebody, a third party, built it for you and is charging you a rate based on an agreement. But
Right.
normally these arrangements have a provision that you become the final owner. After your cooperation period, you become a final owner. So I think that solar rooftop is really a way to shield you from future pandemics. No, but obviously, if somebody else built it for you, then that's subject to the agreement that you made. You might say, okay, I will pay you on the basis of the spot market prices. Well, that could be a source of high prices for you. No? But
Okay.
but like I said, it should be an opportunity to shield you from the price impacts that normally happen during a pandemic, like what we're seeing now.
All right. And then due to the interest on time, Mrs. Nian, and then maybe my colleague Ngan can just put in the Q&A box that question about coal pipeline and the financing, and Mrs. Nian can just answer it by typing her answers. Because at this juncture, we really still want to hear the reactions from our esteemed set of reactors. First off, we have Mr. Marcelo, Environment Section Manager of Toyota Motor Philippines, representing a large-scale energy buyer in the Philippines. I'm curious to hear his reactions from the sets of presentations from Sir Bert and Mrs. Ngo. Sir Mark leads Toyota Motor Philippines activities to achieve the Toyota Environmental Challenge 2050, which includes shifting the company's operations and supply chain to renewable energy by 2035. So Sir Mark has been a close partner with the Clean Energy Investment Accelerator as we aim to green their energy, not just for Toyota itself, but for its supply chain partners. Sir Mark, the virtual floor is yours.
Hi, Marlon. Thank you, and good morning to all the participants. So for Toyota, just to give you a background, the total capacity of our supply chain and dealers is around 80 megawatt. Or in 2019, we have reached 213 megawatt hour. And first, on my reaction to the presentation of our expert resource speakers. So for Sir Bert, I think it's the first time I heard that coal is intermittent and RE is reliable despite the Philippines' condition of having many natural disasters. So usually it's the other way around. So I think this is a good indicator for the future of renewable energy in the Philippines. So for us, we want RE to be reliable, cost competitive, and in mainstream and accessible. So the ARCOA and the GOP, it's a game changer. It gives a competitive edge, especially for those multinational companies with carbon neutrality direction. And hopefully it will translate in bringing more investment both in the manufacturing and the power sectors. Also, if we can give the power to choose on private sector, the type of electricity, I think it will follow that there will be increase in demand for RE. So maybe as mentioned in the presentation, also observed, if end user can get a direct access to the RE generator, then I think the government should support by making a platform that is very accessible to the private sectors, to individuals, uh, accessible in a way how easy it is for us to purchase via Lazada or Shopee. So that kind of platform. And if the government give more incentives and opportunity to scale up RE projects, it will be very helpful. So we have to engage RE up to the household level, where those who wants to get involved in decarbonization can participate. And also, the master plan to increase the RE for both Philippines and Vietnam are very commendable. But everything should be accelerated, especially in terms of implementation. Like for Toyota, we have the Toyota Environmental Challenge 2050. Now they accelerate it into 2035. That's why we're tapping the expertise of CEIA to help us accelerate and achieving this target. And also, finally, for the mobility sector, I think to fully decarbonize the transport sector, the RE roadmap is very important. If we electrify with existing coal and fossil fuel power plants, it's not really decarbonization. So electrification of mobility will follow as soon as the infrastructure for renewable energy in the country has been developed. So I think that will be all for me. Thank you.
Oh, thank you, Sir Mark. I capture your points on like three main things, right? Like one is this new sets of information about coal being intermittent and RE being reliable is a shift on narrative that is somehow welcome by corporates who have these renewable energy targets. Second one is really highlighting what corporates want, but what buyers want: reliable, competitively priced, and immensely accessible renewable energy. And number three is also not forgetting that we also need to have a renewable energy powered transport system. So mobility and the scale up of RE will affect how we decarbonize the mobility sector. So thanks, Sir Mark. And thanks for sharing your time and your insights as well and reaction. And for our next reactor, we have Mr. Shalish Telang, who is a technical manager for renewable energy at the CDP, the Carbon Disclosure Project, primarily working on RE100, a global initiative bringing together the world's most influential businesses committed to 100% renewable electricity. He has over 10 years of work experience across corporate renewable energy sourcing and the broader sustainability domain. So in this current role, Shalish is really managing the technical deliveries of the RE100 initiative, and we are looking forward to hearing your insights and reactions, Shalish. Thank you.
Thank you, Marlon. Am I audible? Yeah, thank you. So first of all, trust me, I have learned a lot from this presentation today. This is the exact information I was looking at to disseminate with our members, RE100 members and other CDP reporting companies having operations in these key two markets, so Vietnam and Philippines. So thank you very much about sharing this information. As you clearly explained and introduced myself, I take care of RE100 technical deliveries, which include helping different corporates to understand what kind of corporate renewable energy procurement options are available in different markets, and how companies can make credible renewable energy uses claims using those options so that they can avoid greenwashing, double counting, and claim those renewable energy in such a manner which makes sense and have impact. So I have some observations, especially about Philippines and Vietnam market. But before that, I just would like to give you some numbers in terms of impact, like what RE100 membership looks like.
Shalish, is it okay to just jump into the reactions considering our time constraint?
Sure. Yeah, sure. Yeah. So in the interest of time, I'll just jump on some of the key observations which I learned. So especially, this is basically going into the right directions. In Philippines, what I learned from BSM is the market is opening up for the corporate renewable energy buyers, especially about those recommendations where it has been recommended that we should not have that retail electricity supply license as a need. So that should be removed or should be adjusted to have access to corporate renewable energy buyer to the market. That was really, really interesting, because with that in mind, corporates will have more procurement options directly. And in terms of Vietnam, I'm really fascinated to learn about Vietnam will officially run the competitive retail electricity market in 2023, and also learned about this direct PPA from the work of Clean Energy Investment Accelerator, which ran as a pilot before. So which is also an important development, especially for corporate buyers, which will have larger impact in terms of corporate renewable energy sourcing in near future. So those are the two key observations I have, which I feel those are the things moving into the right direction. And as I said in the beginning, we have significant presence in Philippines and Vietnam, like close to 38 RE100 members have operations in there, and Vietnam close to like 35 members in there. And already companies are like sourcing 6% of electricity in Vietnam and 38% of renewable electricity in Philippines. So that number should goes up. And last point I would like to highlight is it's not just RE100 memberships. Like a lot of companies have operations in there across their supply chain, which really makes sense for them to have more sourcing options. And with that in mind, I like to echo what Mr. Marcelo said. This variability on renewable energy is not a problem in Philippines. That is fantastic. Good to know that. And companies like Toyota is also engaging with supply chain, and many other companies are doing the same, which is a clear signal for having more and more renewable energy sourcing options into the market. So with that, I end my comments. Thank you.
Oh, thank you, Shalish. And then we are also sending out like a set of key takeaways and insights from this webinar. And so we invite Shalish to really fold in there like any information that we can convey to our participants on RE100 and how they could start cooperating with other corporates in those impressive numbers from the region via the RE100 platform. So thank you, Shalish, for sharing your insights. And we have as our final, last but not the least, reactor for today, providing a regional renewable energy developers perspective. So they have interest in both Vietnam and the Philippines and beyond, having participated in both the Philippines and Vietnam's renewable energy market development. We have Mr. Roman Miguel de Jesus, Executive Director and Head of the Commercial Operations Department of AC Energy. In this role, he manages the capacity of the operating plants of the company, including the sale of power. So Miguel also concurrently heads AC Energy's South Luzon Thermal Energy Corporation and AC Energy Shared Services. So we are privileged to have Miguel share his thoughts, insights, and reactions. Sir Miguel, the floor is yours.
Hi, good morning, Marlon. Can you guys hear me all right? Okay, so in interest of time, I'm going to get right to it and maybe just focus on one point. But maybe before that, let me just thank CEIA for inviting me here. I'm very, very excited to speak about both the Philippines and Vietnam, having been involved in both markets at the start of their feed-in tariff adventures, right? In the Philippines, we started building wind farms in 2014, and then in 2018-19, while I was in Vietnam, we're working with our various partners in Quang Binh, in Nguyen Ninh Thuan, in Dak Lak, and so forth to get all of those other projects going. So really appreciate the opportunity to speak about this market. So the one thing I just wanted to focus on for this discussion and taking the perspective of a generator with a portfolio of assets is to highlight how exciting both markets are right now. In the last 5 years, we're seeing a complete shift from a view of long-term contracted feed-in tariff contracts to all of these short-term retail contracts, and or at least an interest in doing that in Vietnam. And this movement of trying to go directly to the end users whose interests are in RE creates a bit of a tension, right? And the tension that I would say is who carries the risk of managing the supply-demand imbalance. Okay. Previously, the ones in charge of managing that supply-demand imbalance would be the controlling distribution utilities or national entities. So EVN ultimately in Vietnam is accountable for maintaining this balance and the cost of power across everything. But as the decisions are being made, and rightly so, to emphasize the ability of end users to directly select the kind of power producers they want to have, there has to be a shift of some sort. EVN, Meralco, Transco, NGCP are not in the position to take that on. And so what naturally happens has to go one of two directions. Either the end users have to take it on, or the generators have to take it on. So what Mark highlighted earlier is, and in my experience of dealing with end users wanting to buy power, the end of the day, they want a few things, right? They want to be assured of reliable power, they want to be assured of cheap power, and they want to be assured now of renewable power. Okay, they don't necessarily want to bear the burden of having to expose themselves to the wholesale electricity spot market to buy power for the times when the solar plants are unavailable or the wind farms are unavailable. Bert is absolutely right in terms of the reliability of solar farms and wind farms. The reason why solar farms and wind farms are so reliable is because maintenance is done when the sun isn't shining or the wind isn't blowing, time of the year, right? So whenever the wind, whenever power is needed, it's available. Whenever the natural resources are available, the wind farms and the solar farms are up. But that does mean that there are times of the year or times of the day when they are down. Now, I'm quite confident that the RE100 customers that we've spoken to, as well as end users such as Mark with Toyota and their portfolio of customers, don't want to be put in the position of managing that. And ultimately, that falls upon us as generators. And I'd like to think that at least in our case specifically, we're in quite a privileged position because we made the decision early on to invest heavily in solar while trying to understand the nature of the balancing requirements in order to ensure that our customers would be in a position to receive as much renewable energy as possible. But ultimately, the risk as we see it rests with us and as generators. And with the way we try to look at this is we really have to see our exposure from a portfolio perspective, not only within markets, but across markets, not only short-term contracts, but long-term contracts. And so when we view our own exposure, our regional strategy is really a strategy to manage risk ultimately, because when we view the various markets and the different stages at which they are at, we need to be able to understand this exposure on the whole. So I think Marlon and to the rest of my fellow reactors and the speakers, we're at extremely exciting point in this adventure, and very much looking forward to pursuing this conversation with all of you. So thank you very much, Marlon.
All right, thank you, Miguel, and thank you for your sharing your insights. And really, great to put into the fore that, the thing that we have been observing about the tension on supply and demand, the end users and generators, and with who bears the risk in price fluctuations. And ultimately, as you mentioned, the strategy of a company like AC Energy would really be to manage these risks, because the risk ultimately falls onto the generator side, ensuring that what customers really want is really just reliable, cheap, and renewable power. So that's great to highlight, and a good take-off point as we open the floor. And we would like to request our speakers and reactors to keep your video on, so that we can have the virtual floor open for a panel discussion as we aim to answer a set of pressing questions that we have. So we will have as a kickoff question that item that was raised earlier in the open forum. When the coal plants or the fossil power plants will not be financed and will not be part of the pipeline, how do we make sure that the clean energy supply will be able to power the increased demand, the increased demands from industry and commerce? Sir Bert and Mrs. Ngo mentioned certain challenges that need to be addressed, but how do we make sure that we have both, the firm ambitions set by India will be replicated in the Philippines and Vietnam and continue to be sustained? So curious to hear, Sir Bert, your thoughts, and then Mrs. Ngo, and then we can have a reaction from the set of reactors. So how do we make sure that there's power supply practically if the pipeline does not get financed, if the existing fossil pipeline does not get financed? Sir Bert?
Yeah, first of all, on the ambition, I think I said earlier that it appears recently that the Department of Energy has been coming up with the proper policies. They've already issued the coal moratorium last year. Now, based on, I sit at the National Renewable Energy Board, and based on our meetings and so on, it appears that the DOE has already accepted as a minimum the 35% target by 2030. I know that's not an exciting figure, but we're coming from below 21% this year. No? So yeah, it's a move forward, and there's a clean energy scenario that they're now including as part of the plan. So all good on the DOE. But I think that when we update the National Renewable Energy Plan with the new findings on unreliability of coal, et cetera, then we'll have new numbers, because RE prices continue to fall. Now, how do we ensure that supply and demand matching? I think in the Philippines, the advantage is we've got the IMAP as our market operator. Of course, the National Grid Corporation of the Philippines, NGCP, is the system operator. And the problem we have now is the system is still being developed, and therefore technical constraints, line constraints, really constrain the greater dispatch of renewables. For example, solar in Negros, for example. But as NGCP implements the expansion that it's already laid out, then we'll have presumably less and less of this problem. No, it's a technical solution. We just have to wait for them to complete those extensions. So I think that we've got the proper framework in the Philippines. I hope that private sector, AC Energy, and all of the others in our market continue to invest properly. I think you'll find that the solution, you don't even have to be guided by climate considerations. Solar is cheaper. Wind, based on the information we have, is apparently competitive also. A lot of RE is competitive. Biomass at the local level is cheaper than anything else available locally. So we can see that. We just need to make sure that everything, all of the frameworks that we have in place in the Philippines get executed. The problem in the Philippines, as all Filipinos know, is not that we don't have the laws, they're delayed in implementation. So that's my perspective.
Thank you, Sir Bert, and thanks for sharing your thoughts about this being a technical solution and really expediting frameworks and making sure that there's follow-through work on frameworks being implemented. I'm curious to hear on the Vietnam case, Mrs. Ngoc, on what will happen if the pipeline that were originally pipeline don't get online, and how can clean energy truly scale up to still meet growing demand for power as the Vietnamese economy continue to grow and recover. Mrs. Ngoc?
Hello. So for the Vietnam case, as you see in the presentation earlier, that we are observing the very fast growing in terms of capacity of renewable energy in Vietnam. And now we have a quite significant share of installed capacity of renewable energy, especially solar, and an upcoming wave of wind power in very near future by the end of this year. There was some issue relating to accommodating all the power generation from the renewable energy that come from the particular geographical characteristic of Vietnam, because most of the renewable energy, the wind and solar as shown in the map, are concentrated in the central Vietnam, where the load, the main demand for the loads are in the north, in the south. So it was a kind of increased demand for cross-regional transmission from the renewable energy center to the north and to the south, which is put a stretch on the transmission system. So one of the key challenge for the renewable energy scaling up in Vietnam is to develop the grid, transmission grid, to match with the speed of development of the source, the renewable energy sources, and also to have of course technical solution for the system operators to balance the system to absorb all the power generation from the renewable energy, the variable sources. And there should also be market mechanisms in terms of encouraging the auxiliary services to enhance the flexibility operation of the system. So alongside with renewable energy development, the grid infrastructure as well as the flexibility of the system should be improved.
All right. Thanks, Mrs. Ngoc. And I see Miguel nodding. What is the role of an energy developer in making sure that the grid infrastructure readiness is addressed? Is it an ongoing issue for you, not only in Vietnam but also in the Philippines? And what can really be done proactively to address these challenges at scale, right? Rather than wait for certain things from external actors, what can be done by existing stakeholders? And I'll also ask RE100 Shalish to weigh in on what will be the role of corporates later in making sure that there's readiness on the grid infrastructure. Miguel?
Yeah, so Marlon, let me answer that two ways. One is to highlight the fact that transmission is really a national concern, right? It's integrity that has to be ultimately rolled up to government, right? And that's why the NGCP franchise, while it's there in the Philippines, at least it's, you still have Transco very much involved. Or in Vietnam, that's why EVN's role, both on the national and even in the regional spaces, will always be there. That can't be done. So while private developers like ourselves would like to help, we really have to be there to assist rather than to displace the entity ultimately responsible. Having said that, we do have experience in both markets where a significant portion of the transmission line had to be developed by ourselves. I think the largest transmission line we did build in the Philippines was a 60-kilometer transmission line from Pagudpod all the way to Loac, and 60 kilometers is no joke through the mountains. So sometimes that kind of burden has to be put onto the developers if they really do want to make these things viable. So that's the first way to answer. The second way to answer it, and it's very, very exciting in the Philippines now because recently the wholesale electricity spot market has moved from a 1-hour interval to a 5-minute interval. And as head of the commercial operations group, I see the numbers on a daily basis. It's fascinating. You're seeing intra-hour fluctuations that are extremely, extremely fast. And to Bert's point earlier on, the need for quick response, balancing power is more obvious now than ever. So my own sense, especially with regard to enabling RE, is that what we need to see in the next few years, and I think it's just around the corner, is really the rise of storage. Storage will allow us to be able to have quick response, intra-hour balancing effects within the market, whether as buyer or as seller, which is extremely, extremely powerful, right? On the one hand, and then on the other hand, storage will also allow us to do load shifting altogether. Solar plants over-generating in the middle of the day could move some of their power to the evening peak, which is an issue in the Philippines, which has a large commercial operations, commercial demand. In Vietnam, it's a little bit more flat. Their industrial demand is much, much higher, which means that they need power even off peak. So I think storage is the key in the development, and obviously we're looking at that very, very keenly, and as are all of our competitors.
All right, thank you, Miguel, for highlighting the role of those that have the national franchise, but also what could be done by the private sector, and opening up the conversation on storage, because that's something that could provide technical solutions, as what Bert and Mrs. Ngo mentioned. Like, there are technical solutions that could provide answers to our challenges. On the side of the corporates, Shalish, have there been work on making sure that there's grid infrastructure readiness? Because ultimately it is them that will need the power to be wheeled at their base of consumption. Is this something that has been discussed on the RE100 level, and what can they contribute?
Yeah, so from corporate procurement side, it's like having an impact on the overall grid. We need like more corporates. We need to aggregate demand. So it's like alone they cannot do a lot. Together they can put a lot of pressure on the relevant stakeholders to have right infrastructure in place. So having access to grid infrastructure, first thing, having grid infrastructure in there is very important aspect, and having access to the grid infrastructure was an important point raised by many CDP reporting companies in the past. As I have put some stat in the chat if you want to have a look at that, but there are like almost around 300 corporate sourcing companies, renewable energy sourcing companies in Philippines and Vietnam each. I'm talking about the whole CDP reporting companies, and of course 38, 35 companies from RE100 members. And why this is important? Because these companies have 100% renewable electricity sourcing targets on them. And that means by a certain target year, they need to achieve their 100% renewable electricity target because those are public facing targets. So to avail this and to enable their corporate renewable energy sourcing, they definitely need to have access to the grid infrastructure, transmission and distribution network. And this is the point that these companies are raising through RE100 reporting and CDP reporting from quite a long time. So this is an issue as well. Many markets, they have also mentioned about whether grid transmission and infrastructure is available, but they do not get access to this infrastructure because of regulatory bottlenecks. So this is also one of the regulatory issues these companies have reported so far.
All right, thank you, Shalish. And then talking about regulatory bottlenecks and stuff, and these ongoing challenges on policy and things that are in the domain of the government. I'm curious to hear from Sir Mark, as Marcelo, as someone who who's overseeing the migration of your supply chain and your company as well towards renewable energy, what could be a role for corporates truly to be more proactive in, there are there are recommendations here on updating the Philippine Energy Plan, making sure that certain mechanisms are addressed. Is there a way for corporates and buyers of electricity to be more proactive? Curious to hear your thoughts, Sir Mark.
Yes, I think there should be a lot of collaboration with the experts, and also there should be also directions coming from the top. For our case, since we're multinational, it comes from our mother company in Japan to be 100% renewable. But also we should consider the steps of being decarbonized. First, we need to do energy efficiency. After that, everything will be offset by first you install your own solar in your facility, you invest there, and then the remaining you can do RE purchase or PPA, and hopefully the renewable energy certificate market in the Philippines will push so that we can really decarbonize the whole industry. So for us, it's everything should be informed, and yeah, partnering with team like the CEIA is very important, and also involvement of the local government unit, giving incentives and supporting their programs for us, like in manufacturing. I think that will be proactive for everyone. Thank you.
All right, thank you, Sir Mark. I'm just well aware of the time, and we, at this juncture, I'd really just like to ask Sir Bert and Mrs. Ngo, from the presentations of both the Philippines perspective and Vietnam perspective. Sir Bert, what can we learn from the Vietnam experience? We've seen, their wind, within a year grow from 40 megawatts to gigawatt level, right? In that same period, the Philippines hasn't, we had that spurt during the 2016 period, and now we hope that the GOP will really usher in. And as Sir Miguel has mentioned, we are an exciting point. But what can we learn from the Vietnam experience so that we could see an increase and contribute to what corporates like Toyota aim for? Immensely accessible, affordable, and reliable renewable energy. What can we learn from the Vietnam experience?
Yeah, I think the main point, Marlon, is that market signals work. FIT works. We took out FIT because we thought that something else was more reliable and cheaper. That's been debunked. So learn from our lesson, move on with proper market signals. They really work.
All right. Thank you, sir. Very succinct and very nuanced observation on what works. Hopefully, we could continue working with the Institute of Climate and Sustainable Cities as we move forward on this policy asks. And same question for Mrs. Ngo. From the Philippines example, I mean, it's been a liberalized market. We've had quite a journey over 2 decades. We have a renewable energy law. We are at an exciting juncture right now with the Green Energy Option Program. But what can the Vietnam experience perhaps learn? Vietnam can learn from the Philippine experience, especially that you're looking at the 2023 rollout of a competitive retail electricity market. Mrs. Ngo?
Okay, thank you for the question. So as Philippines already operate the competitive market for a long time, there would be a lot to learn from our neighboring country. And as Vietnam, we are in the process of unbundling the power system, and there's a roadmap for the competitive retail market, and for the wholesale also. We are in the stage of having the wholesale market, but it's not yet completely competitive, because now the buyer, we have more than one buyer rather than EVN at the moment, but all the buyers are still EVN subsidiaries. So there's still a lot to be done in Vietnam and a lot of restructuring. So I think along the way there would be a lot of lessons learned from the Philippine case, but also from other countries. We have one thing that quite particular to Vietnam is that we have the percentage of people who have access to the power grid is very high, more than 99%. So I think the key thing that we need to do here is also to be balanced between the operating the market with the retail market, will be defined by the market-based mechanism, but also the roadmap should be very carefully considered the impact to the society, especially to the affordability of electricity.
All right, thank you so much, Mrs. Ngo. And as we wrap up this convening this webinar on lesson sharing between two countries, I'm curious to hear final thoughts from our reactors, Mr. Miguel De Jesus, or Mark Marcelo, and Mr. Shalish Telang, on what would be the key messages that you want to convey to both policymakers, colleagues among buyers, colleagues among sellers, on what should we focus on as the year wraps up and we look forward to 2022. So Mr. De Jesus, Miguel, Sir Miguel, can you weigh in?
Well, maybe both to Shalish and to Mark, the power is really in your hands. If you ask for it, we will build it. And I think that's the message, right? Business really responds to need. And if there's a need, then we'll find a way to make it happen.
All right, thank you so much. And on that, Sir Mark Marcelo, any thoughts, any reactions to that?
So my reaction is when Power Gen offering an RE source comes to you, you talk to them. Because
Okay.
they know definitely they will balance the risk for you. And we can move forward.
Okay, thank you so much, Sir Mark. And Shalish, exciting observations from both buyers, sellers, and then the CSO community from this part of the world. Any reactions, thoughts, and closing statements?
I would like to say that everything is moving to the right direction. That's what I learned today. And this is the message which I want to convey to corporate buyers as well through platform like RE100.
All right, thank you so much. And with that, we are truly thankful for Sir Bert Dalusong, Senior Advisor for the Institute for Climate and Sustainable Cities, for Mrs. Nhan Ngo, Executive Director of the Vietnam Initiative for Energy Transition, to Mr. Roman Miguel De Jesus, Executive Director and Commercial Operations Head of AC Energy, Mr. Mark Marcelo, who manages Toyota's Environment Department, and Mr. Shalish Telang, Technical Manager of CDP, representing the RE100, for your invaluable insights and contributions to today's discussion. So what we'd like to do is that really not just make this as a one-off discussion. We have had several ways forward in terms of recommendations from Sir Bert and from Mrs. Ngo, and continue the conversations among entities like Toyota, AC Energy, and RE100, and have this as a kick-off conversation for more detailed and more work in terms of unlocking clean energy and facilitating the Southeast Asia's renewable energy transition within this decade. So Thank you, everyone, for joining us in today's discussion. The event truly is part of the CEIA's continuous and continuing dialogue series, and you can watch our previous discussions in our website at www.cleanenergyinvest.org. So what we will do is consolidate, coalesce, and summarize our key takeaways and relay them to you. And we invite you again for the next conversations that we will have as we continue to unlock opportunities in Southeast Asia's energy transition, starting with Vietnam, Indonesia, and the Philippines. So with that, thank you, everyone. I hope you've had a good morning, and we look forward to see you soon. Thank you very much.
Thank you.
Thank you.
Thank you.
Thank you to our speakers and
Thank
reactors.
you.
And
Thank you.
colleagues and participants. Thank you. Take care.